How's it going, everyone? It is Tuesday, May 7th, 2024, and this is the video for today. So sorry I could not get a video out yesterday. I was traveling, did not have time in the morning, even though I thought I would have some time. But I did make a post on YouTube on what I did in my positions, so we're going to talk about that right now. The first thing I did was I closed my on PCS for a 90% win yesterday. We got in at a 20-cent credit. We got out for a 20-cent debit. I like the move from on here, but didn't quite have the relative strength I wanted in the stock. And it did break out of this bearish channel, which is a good thing, but I originally thought it would be a little bit more bullish. But in all cases, the stock is doing well and the market is strong, so I could hold this until expiration. I think that in hindsight, that's probably the better option because the chance of it going back through my short strike during this week is pretty low. The only risk is if the market starts to pull back, test the 50 SMA and doesn't quite confirm the breakout. So I decided yesterday that, hey, we have this breakout happening. I don't know if it's going to hold or not, but on is in a pretty good price. Let me take the 90% at this level. That's usually the kind of the minimum that I go for. Let me take the 90% and let me get out of this trade. So nice win. If you're still holding on to it, I think it should still be okay. I decided just to close it a little bit earlier. Next thing I did was close my Lulu PDS for a break even. So Lulu PDS is looking, first of all, Lulu is an excellent pick. I got the market wrong. And for my Lulu PDS, what I wanted to see was we had this level here in the market, and if we rejected back down, Lulu would fall. Now the market has broken through and it's holding the gains pretty well. So I love the weakness on Lulu, but my market bias was wrong. So if we look at the chart yesterday, here is what I saw in the market. We had this gap up and we had this bear cycle, and this bear cycle really had to produce. It had to get something going, and we didn't get anything going in that bear cycle. Now, Lulu tested that 8 EMA over here, came back down, broke through this level, and I took the scratch right around 11.25. So I entered right here, took the scratch somewhere around here. The bid-ask spreads are a little bit wide on the stock. It's still looking excellent. You can see it's pretty much hovering right around our entry price. But the market is a little bit too strong for me. I'd rather wait to the sidelines, see what happens to the market. If it decides to tank today and Lulu breaks down the support level, then I will enter the stock. I have no problem re-entering the stock. But if I am wrong about Lulu, let's go to the 15-minute chart. You can see it a little bit more clearly. If I'm wrong about Lulu in this scenario, then eventually I won't be able to tread water. It can only tread water for so long. And I'm drawing on my experience here with the Coupang CDS I took last week, where I had a really great, relatively strong stock in a weak market, but the CDS wasn't quite the right pick for the strategy, and the market was trending down. So my only opportunity was to get out for a tiny win. Here, same thing. This is the same thing, but on the opposite side, where I had this bias about the market, had this bias about Lulu. The market didn't pan out, so let me get out of the trade, and I can always get back into the trade on a stock like this. So one scratch, one win on. Let's look at what's happening in the market on a longer term time frame. Still have our strong move up here. We pulled back. We found some support at this trend line, which is getting a little bit wonky right now. But I do see this trend line coming to play over here above the SMA 100, around the $500 level. haven't spent a ton of time below that level. Market had digested a lot of the news. We have tested the 50 SMA, the A, the VWAP-Q, broken to the upside. Now we're trying to hold those gains. I'm always yawning when I do these. I'm not even that sleepy, I'm just drinking coffee. So we had this gap up yesterday, which was unexpected, in my opinion, but that is typically how we blow through these SMAs on the bullish side. There's just this big gap up, and it never quite gets smacked back down. There's a lot of buyers to offset these profit takers, and then we finally get the lift off later in the day once the market has worked off all of the supply, and then the demand is still there, it's still pent up, and it ends up moving higher. So that's what we got. We got this late day compression break and this late day bullish trend day. Today we got another gap up, but definitely a lot weaker because we got this move here. We couldn't really get anything going for most of the day. Pretty LPTE. Red candle here at 145, flushing out all the sellers. I think there was some Fed speak happening today as well. Now we're below the low of the day. We filled in the gap, and now we are trying to take away some of the gains here. So I did have a long candidate lineup, but I'm going to see what the market does. Maybe wait till the end of the day before I decide whether I want to take it. But on an intraday basis, we have the potential to reverse this move and test the downside. If I look at the nature of this move, when we make a big extension up here, we do have a bid check for the downside, and it's resulted in this wide patchy channel. We have a break of this channel, so that bias may be changing, but I think we have two things this week. We either hold this gap, which would be bullish, or hold halfway of this candle, which would be the most bullish, or we test this SMA here, and then we really launch off. So there is going to be some bid check at this point because there hasn't really been a strong bid check for the past couple of days. If you look at the M15 chart, we get this gap up, we test the bid, and then we grind up higher. Gap up, test the bid, grind up higher. Gap up, test the bid, and now we've finally kind of reached a point where profit taking is overwhelming some of the buyers, all the people who were in here. I think some of this was a flush out of some short sellers. Probably they were trying to cover their positions, and that resulted in this move up higher. So if this ends up being all fluff, it was most likely a short covering bounce. We're gonna find out in a little bit. But market D1 long-term bias is a 1, still a 1, because we're still in the up cycle of this trend. The move has been pretty patchy, but we have a chance to still break out and make a new high. We still have a chance to trend. Fundamentally, I'm also still a 1. The main thing that has changed for me is I'm going to be watching the next ISM services number, the next GDP quarter release, and the PC inflator very closely. Some rhetoric has shifted to, did the Fed hold rates for too long? Is there going to be any recession risk, or are we still on track for a soft landing? When you have a weak GDP number, the soft landing gets called into question. The recession risk goes up in the eyes of some investors. So I want to see the second quarter revision that they usually release at the end of the month for GDP, and I want to see it do well, and I want to see that continue again for even another month. That tells me that what we saw in this month's GDP was a one-off rather than the start of a new trend. Our shorter term D1 bias is also a 1 bullish, but I am watching and I know the signs for what would get me to be a 2 bullish. What would get me to be a 2 is if we get some sort of retest or some hold of this bid check over here, and then we start to launch off and we get a lot tighter price action instead of really gappy price action. I want to see more tighter moves versus something here where we do gap downs and gap ups. It makes it harder to swing as well. Get rid of this useful line. So still one, but we have the potential to enter some longer term swings at this juncture. Yesterday I think was a good time. I wasn't at the market, so didn't enter any swings. Today we're going to wait and see because we might be filling in a little bit of this gap. We want to see buyers come in and hold this level. If we're able to hold this level, have the 8 EMA catch up to the market a little bit, that would get me more bullish. It means that we've kind of withstood a down cycle, a shorter term down cycle. We haven't been, price hasn't been knocked down. It means that the bid is aggressive and we can really get that next move higher. Let's go into our intraday buys for today. Gap up, choppy price action, low volume, mixed candles, lots of tails and wicks, right? So pretty much pretty LPTE. We get this pop up. Oh man, maybe we get something going. We pull back, lots of tails and wicks, just super choppy, flat price action. You can see VWAP is flat. The market's chopping around this 8 EMA, just going nowhere. So we get this poke to a new high of the day. This is looking good. Holds, and then we have this bearish hammer, which is not great. We need to erase it soon. And then this was kind of the test here at 140. If this was a legitimate move, we would have seen something like this, where we break out to a new high of the day, come back, test the open of this candle, it holds, and then we get this steady buying. So this downside is contained because the bid is so strong, right? We have a quick probe, some profit taking, maybe some some short specs are piling in here. Then we get that move to the upside here. We get this move here. We test this candle. This bar was already a bit of a warning. It retraced a little bit deeper than we wanted it to. And then this bar was like, all right, we are definitely not testing the upside. We get follow through on this bar. Pretty weak follow through. Fill in the gap. So we have a late day gap fill. Some volume, but pretty choppy. It doesn't have a lot of momentum. I don't know if we're going to have any follow through on this sort of move because we didn't stack red candles over here. There are plenty of buyers coming in and supporting the bid. So we might just have to work off some extra supply. I think that this move should be contained. If buyers can get something going to at least test somewhere here. This was a minor intraday level, right around this 5, 17, 20 level. So if we can get above the 8 EMA here, we start to challenge back in this red candle. I think we are good in terms of a gap fill continuation. I don't think we're going to go past the gap fill. If we're here for the next, 30, 45 minutes, we can't really get off the deck. Sellers are piling in. Then we actually might get some follow through on the downside on this gap fill. Flushing out some of the buyers over here. And that would give us the fuel to reach the downside. So for day trades, I would play it pretty light. There was a couple of nice stocks that were doing pretty well, like FMC was doing pretty nicely. Cost is also looking okay. GE is looking decent, but not a lot of stuff to day trade. I think you had to get in early on this move. Probably in this bullish cross here around 1045. That's when I'd probably take day trades somewhere here, 1045, 1050 on relatively strong stocks. You want some grinders. You know it's going to be a pretty dull day, and you would have sold into strength, or you could ride the move higher. But fairly LPT kind of day. This warning sign, I think, is this flush down, and certainly this red candle at 145. You should be out some stocks already when they stall, so you can see something like G. If you took GE, for example, right? You took GE right here, stock is grinding up higher, continues really well. Compression, move up, compression for a couple bars, move up. Oh, and then we get this bearish engulf. That's not great. And then you'd probably get out of the trade if you're more jumpy. Get out of the trade at 12:45 till 12:25. You get this HA reversal candle at 12:20. But certainly, I think at 12:25, when you get this close below the 8 EMA, this trend is over. Wait for the pullback. We got LRSI crossing down. You got some nice gains here, 169.35 to 170.25. So you get about $1 in GE early in the morning. Wait to the sidelines, see what happens. on this stock. So that would be an example of an early day trade that you could take. All right, so that's our intraday bias. The sector strength that I saw, tech was on the weaker side. Mega cap tech was a little bit weaker as well. There was some market breadth in the rally, but also flight to safety assets were strong. Generally, some more stocks on heavy buy than on heavy sell. So intraday, I was mildly bullish, but I didn't like the non-tech aspect of that. It told me that we were in the later aspects of the rally versus the earlier aspects of the rally. Contextually, on the D1 chart, we're pretty extended from the 8 EMA. And even if I put up like a 3 EMA, let's see, edit series, right? Usually the market will touch this 3 EMA, and that's another nice gauge of overextension. So we have a slow touch there, no touch here, no touch here. So market has been making a pretty strong move up. And we don't want to chase because we know that these moves will usually have some sort of test or some sort of compression. So I expect the down cycle to happen this week in the next few days. I don't think we're just going to keep going straight up. This was a straight up move and a trend reversal. And you can see here that we had these minor pullbacks. We didn't quite go as straight up as we could have. Or I guess we went straight up here. Right, we got this breakout of compression, but we have these tests and then these moves higher. So wait for these tests when it gets a little bit too overextended. The market is going to pull back. We just have to wait. We can get a nice entry price. So for swing traders, we have an opportunity lining up. I'm going to take this 3 EMA out because this kind of clutters the chart. We have an opportunity setting up. On this retest, I'm going to look for some put credit spreads. Keep in mind of NVIDIA earnings, so don't get too crazy with the put credit spreads. That has been a market mover. I mean, this really moved the market a ton on the 22nd. So NVIDIA earnings is a market mover. Keep that in mind. We have CPI next week. PPI also coming out before the CPI next week. Those are the major speaks. This FOMC minutes, which is not a major concern. And at the end of the month, you have PCE. So keep those in mind with your put credit spreads. Make sure you're willing to take on those news events before you put them on. But I'll be looking for 1 or 2 nice put credit spreads, and I'm going to try to give a recommendation out in the next coming days. I'm also looking at some in-the-money calls. And the pick that I'm going to give today is going to be a GE long. And I'm going to take the GE 617 long. So over here, or 614, I'll say. 614, yep. The June 14th 160 calls. So fairly tight bid-ask spread, nothing crazy going on here. But why do I like this strategy? So this is a long swing, and we have all this time because the market is staging its next leg higher. There's a couple of different options in terms of how the market could go into play. So let's talk about the market scenarios first. Worst case scenario, let's start with the most bullish scenario. The best case scenario is that the market breaks through the all-time high and continues up and makes a new all-time high before it starts to stall out. When we get that scenario, that could last us, anywhere from a month or 2 months, right? Which gives us plenty of time on GE where it goes all the way till earnings with lots of time to ride out the trend strength in the stock. So that is the most bullish scenario. The second bullish scenario is that we maybe test this all-time high. Maybe we pull back a little bit and then we break through. So still good, but we didn't really quite blow through it. We still make a new all-time high, and the long-term trend is still preserved. Now, the more neutral scenario is that we test this all-time high, but we're not really able to break out, and perhaps we just waffle around that area for a while, right? Maybe a week or 2 weeks. We're just 2 to 3 weeks. We're just in this area. I'll put up the weekly chart here. Oh, there's Levi. Okay, Levi could be interesting. Hit this all-time high here. We're just in this area for a couple of weeks. Don't really do anything. We start to stall. That's when we would probably also exit. And the market would be a little bit more neutral because we're not able to get above that prior high. Now, the more bearish scenario is that the market does make a double top at this level. It makes a double top, and we actually break through this 50 SMA, fall back into the range. If we see that, then we know that there's a market double top. We can feel a little more confident about taking some swing shorts, especially if the market breaks through the SMA 100 and gets through this low. Then we can feel confident taking some swing shorts. And then that's kind of the most bearish scenarios here. Either we get this double top and a lower high, or it really depends on how much we actually are able to break through this all-time high or not. So those are the market scenarios. What do we expect GE to do? Well, we're through earnings, super strong, nice, tight price action. Got through a lot of news and earnings over here. I mean, we had the stock split. So not the stock, but the divestiture, as GE split companies and different separate name, separate ticker, GEV, which has its own separate company. But got through all that news. The main thing I like about GE is that it's pretty tight price action. Doesn't really get too ahead of itself. Pulls back to the 8 EMA. We have this compression break. We have some follow through over here. With a longer term swing, I'm willing to take a pullback and a retest because the stock has shown me its relative strength over the past month. If I look at GE on a weekly basis and I look at SPY on a weekly basis, you can see how really no pullback in the stock. It kind of tested this bid a little bit over here. As soon as the market found support, this stock really took off. Excellent strength. And I see no reason why this stock chart will not continue. Now, some warning signs for this longer term swing. The first thing is I want this stock to trend, and I expect this stock to make moves. Typically, these longer term swings, well, we'll take something like JPM. So not right now. Let's look at it over here, right? We'll have this move. Here's the counter move that lasts maybe 5 to 10 days. Move up. Here's another pullback. Once it's established support, move up. Here's another compression, breakout, another compression, we stall, and then we have earnings. Second thing over here, to digest all the earnings, breakout, little compression, move up, pull back, move up, pull back. So we have these tiny compressions and pullbacks all throughout the move, which is what we want. But the price action stays pretty tight. The 8 EMA is always pretty much sloping up. Really nice trend. GE, beautiful 45-degree chart, trending up. No reason this won't continue. I feel that the market has a potential to be a little bit more bullish than bearish. I don't see the double top at this moment. I'm liking this breakout. I think that I do believe that we will test this all-time high. That seems like the most likely scenario to me. I don't know if we're going to break the all-time high simply because this price action tells me that we had some news to digest, and I wanted to see a stronger move, a stronger launch off of this point. When we didn't get the stronger launch, wasn't as bullish as I was, but I do like this move over here. I do like how we're holding all the gains, and I'm willing to take a little bit of heat in GE, maybe for a week. And I don't think it'll be too much heat because remember, when the market makes this move up, GE might move up, and I might not get the same price as I'm getting right now. So that's my longer term swing. This is going to be a nice experiment and a nice practice for me. I've been studying my longer term swings from my prior charts and just understanding when to exit, when to add, when not to add, have a clear market expectation. So that's kind of what I've listed out all over here. Let me put up my overall market view today. The only thing that's going to change right now is our market M5, which is a little bit bearish at the moment, but on a technical basis, we're pretty 1, and we know that this 1 could shift into a 2 pretty soon. We just need a retest, some confirmation of support. We need some footing in the market, as Dan had mentioned in his most recent video. All right, so with all that being said, GE long is going to be my pick. The 617 calls. Wait till the end of the day. So wait to see what the market does. If we get a huge bearish engulfing candle, a big red flush, okay, you avoided a move. You avoided a bad, maybe not the best entry point. We already have some warning signs over here. If the market holds and closes more close towards VWAP, okay, now I can feel a little bit better about entering GE because I'm not worried too much about some sort of big flush. So I'm going to add GE to our picks. and we're gonna get rid of remove on, and we're gonna keep an eye on Lulu. I'm gonna remove it from the symbol, but set an alert on Lulu. If the market ends up being bearish, Lulu is going to be the first stock that is going to drop. It does its own thing. We got this pullback, super weak. I mean, this stock has been flat in the last few days, right? That's the power of relative strength and relative weakness. We took this short here at 500, so closed at 500. Market rallied 16 bucks, rallied 3% from that move. Lulu didn't budge at all. So we got the market totally wrong, but we got Lulu right because of our relative weakness, and we're able to profit on that trade. So anyways, just goes to show the system. Yeah, so we're gonna keep an eye on some PCSs, some longer term swing potentials for the next 2 weeks. I don't want to get too overloaded right now based on this price action. I'm trying to find 1, 2, 3 really good picks to swing on a longer term basis, and we can start taking some shorter term swing scalps like we had done before, getting a great entry point and selling it to strength. That is going to be a really nice tool for us to have. Thanks for watching, everyone. We're going to take a look at GE. We'll take a look at SPY tomorrow, and we'll see what opportunities set up.